This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. Your top stories this hour. The dollar extending its slide to near four-year lows as President Trump welcomes a weaker U.S. currency. Wall Street at a record high ahead of big tech earnings and the Fed decision. Japan's finance minister warns again that the government will take action on the yen in coordination with the U.S. if needed. Investors now bracing for today's 40-year JGB sale. Plus, India and the EU seal a deal after decades of discussion, creating a free trade zone of 2 billion people.
Take a look at how we're setting up for the market opens across Asia. We're keeping our eyes firmly on the Japanese yen, which has seen the best run since the implosion of global carry trades back in 2024. We're talking about that 152 level. Of course, we have continued speculation about coordinated action between Japan and the U.S. The finance minister Katayama also coming out after G7 meeting, warning the authorities are watching the yen moves very closely. And of course, as we mentioned, the dollar under continued pressure, the steepest four-day drop since President Trump's sweeping tariffs back in April. So we have most Asian currencies supported. We're talking about the Aussie dollar trading near three-year highs. We're talking about the offshore yuan also gaining ground for the last three sessions. Today, though, we'll be watching that 40-year auction, the JGB market after that sell-off meltdown last week, and of course, what that means for global appetite when it comes to long-term bonds here in Japan, especially after that lackluster 20-year auction last week. But it's a really tricky position for Japanese traders because you want to rein in the yield, but then that could actually put more pressure on the Japanese yen. And if you want to support the yen and you cause a spike, then that could really derail the stock market rally that we're seeing here in Japan. Nikkei futures at the moment unchanged after a session of gains, Avril.
Yeah, Shery, I think to your point, something's got to give. So take a look at what we are seeing, even with stocks at record highs, the expectations of corporate profits fueling gains. It is being expressed in the dollar, this bearishness, perhaps that debate going on of how there is a concerted effort to depreciate the currency. And certainly we are seeing how traders are paying up with these bearish wagers on the US dollar. You talked earlier about how we are seeing the steepest decline on the Bloomberg dollar index since Liberation Day to four-year lows. We are also seeing that momentum has fallen to the lowest level since 2020. And then on the other side of the trade, we are seeing how initially, there were those gains in the euro, the pound, to the highest levels since 2021. That seems to have eased off a little bit, but today it's certainly about the greenback. What really moved markets was Trump saying he's not concerned with the decline of the US dollar, but he also made some other commentary about the greenback. Take a listen.
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, I want it to be just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
Let's bring in Bloomberg and life strategist Brendan Fagan. Brendan, so the debate, I think, coming through because of what Trump has said, but we've already been seeing the dollar lower in the past year or so, and then in the past week, because of these expectations or speculation that the U.S. is helping to boost the yen. What has Trump's most recent comments left or meant for the bearish wagers on the greenback?
Well, I think the way you should look at it is it means the administration won't stand in the way of the weakness that we've seen since the middle of the month, around the beginning of Davos. Once the Greenland tensions started to dissipate, we saw some relief in the European currencies, but that has now spread to the Aussie, to the Kiwi, two currencies that have really struggled for direction for much of the last 12 months. So the trade has really broadened out, and then Friday with the speculation of a potential rate check late in the New York session, that's carried through into this week, and ultimately with today's comments late in trade right before the cash close, Trump kind of tipped the wagon over, and accelerated the greenback selling. So it's kind of a perfect storm here, but it seems that the White House in Washington doesn't necessarily want to stand in the way of a weaker dollar, which we know would help their aims with making manufacturing exports more competitive.
Yeah, I mean, President Trump saying that he can make the dollar go up or down like a yo-yo. I mean, he's technically not wrong. I mean, any headline really can move the greenback. But at the same time, is that what he wants when it's really heightened volatility in the FX space? And also at the same time, we heard from Secretary Bessent just last year say that the U.S. has a strong dollar policy. Do we have a clear understanding if the Trump administration is aligned on what they want to see for their currency, or is this just at the mercy of daily trading at the moment?
I think at the moment we are going to see pronounced daily swings, but you can't really come out as an administration and openly speak poorly about your currency. The optics of that would just be horrible. So they're obviously going to come out and say, well, we would love a strong dollar. But if you really take their trade policy at face value and their desire to make manufacturing more competitive, but also boost the domestic workforce here, you have to accept that they're going to be looking for, just on pure economic principle, a weaker greenback. And we're seeing that. We saw that post-Liberation Day last year, but we're seeing it play out again now with the heightened volatility, but also incessant greenback selling.
So they're selling the greenback. What are they buying then? I mean, is it part of this debasement trade that's going into gold?
Well, the easy answer seems to be everything. Stocks are up, commodities are flying, and then when you look across the G10 space, everything seems to be up. As I touched on, Aussie, Kiwi doing really well. Part of that's the greenback story, the dollar story, but there's also a China narrative in there. So everything's doing well. You look at Norway, you look at Sweden, a lot of the European currencies, the Swiss franc notably, really showing some haven appeal there, doing really well, ultimately causing concern about potential intervention from the S&B, funny enough, jumping from the BOJ and the Ministry of Finance to Switzerland. There are now concerns with the strength of the franc that we may have to talk about that there. But Martin Schlegel has pushed back on that. So seemingly everything is doing well against the dollar at the moment.
Can you elaborate to your point on the China narrative here?
Yeah, there are thoughts that there needs to be more easing, but also there's this resilient growth story that has kind of helped shape, I would say the resilience of the Aussie that, in bouts of weakness, especially with risk assets last year, it held up really well. But also you look at the stronger yuan fix. A stronger yuan is regionally going to boost the Aussie. We're seeing that there. But there's also the idiosyncratic Aussie story of the RBA being priced for rate hikes. So it really just seems like a perfect storm to beat down the dollar at the moment.
Brendan, amid all this, we are, of course, on Fed watch tomorrow to hear what Powell has to say. But Trump also saying that interest rates will come down after the new Fed chair, also saying that he'll announce the Fed chair pretty soon. With the Fed independence scrutiny, I guess, that's also fueled the declines in the US dollar. I wonder, could you square this circle for us in the sense that you talked about the manufacturing aspect earlier. What is this potentially going to mean for U.S. exporters in terms of corporate profits at a time where the expectation is the weakness of the dollar fueling that, perhaps?
Well, the funny thing is, I don't know how much we'll learn tomorrow because Powell might be pretty tight-lipped given that he's under investigation from the Trump administration. I'm sure a lot of the questions tomorrow will focus on the subpoenas to Jay Powell and the Federal Reserve, but also to go back to what we talked about earlier, question whether the Fed did step in at any point last week in the currency market. I'm sure that'll be on top of mind, but also there is this overhanging risk of Powell's replacement coming out at any time. It would surprise probably nobody if that announcement came at 1:50 p.m. Eastern tomorrow, right before the statement dropped. So I think we're in for a very interesting day tomorrow, but we may actually not learn that much.
Brendan, thanks so much. Our Bloomberg and Life strategist, Brendan Fagan, for us. Meantime, we're talking about mega deals as well. The EU and India have reached a free trade agreement after almost 2 decades of negotiations. Indian Prime Minister Narendra Modi hailing the agreement as good for his country's manufacturing and services sectors. European Commission President Ursula von der Leyen noted its significance against a backdrop of global tariff tensions.
We delivered the mother of all deals. We are creating a market of 2 billion people, and this is the tale of 2 giants. And by combining these strengths, we reduce strategic dependencies at a time when trade is increasingly weaponized.
Let's bring in Bloomberg Chief Asia correspondent Rosalind Matheson. So Ross has been called the mother of all deals. When you look at the significance of this agreement, how much of it is, hard fought and partly to do with people wanting to bypass the US given the geopolitical backdrop?
Well, certainly there's a pragmatic element that's coming into all of this. I mean, there's a famous joke that India doesn't do trade deals because there's no votes in trade deals. And we've seen that previously. But there was certainly a motivation after many, many years to get this deal over the line. And similarly for the EU, we saw, of course, they've also just wrapped up a big deal with South America after, 25 years of negotiating. So there's a push factor going on here for a lot of these countries in these blocs, which is, as you were saying, the realization they have to diversify, but they have to diversify their export markets, their investments, where their businesses are, and that's a pragmatic response to the policies and the erratic policies really on trade of the US administration. And realize that even in an administration after Donald Trump, this is the trajectory that the US is on. It's not going to change simply when there's a new president in the White House. In the longer term, you've got to negotiate these different kinds of deals. And for India and the EU, the realization you've got to find a way to get into each other's markets. And so you did see, India is going to open up its market to European car makers. I mean, that's very significant. Some protection, that India is keeping for things like dairy and agriculture. But, just as they're going to win from this for their apparel makers, perhaps their food companies into Europe, they're also going to now have exposure for European car makers into India, which is going to be a negative potentially for India companies.
And Ross, the thing is that these trade deals also lead to more security alliances, right? We understand that there's also a new security partnership between the two countries.
That's right. And again, to that point about pragmatism, there was an attempt to get some language in there from the Europeans about the war in Ukraine and India's kind of buying of energy from Russia. Therefore, is that supporting the war in Ukraine? That all went out in the final version. It's very much sort of about business, which is, perhaps, joint production of weapons, some arrangements around intelligence sharing and so on. But again, a realization that's sending quite a political message is that we see each other perhaps forming these new kinds of alliances, these new spheres of influence and sharing information, because is the US going to be that reliable partner, particularly for the EU when it comes to defence? Donald Trump, he treats foes and friends, alike in a very transactional way, and the EU's waking up to that reality. And for India also perhaps to diversify its own security arrangements. I mean, it's got Russia, China, it's got those understandings in the region and tensions in the region, but it also can make use of the EU, particularly on the intelligence side. So again, it's a trade agreement with a lot of defence and security tacked on, and that's really sending an overarching message about where these two countries and this bloc see this relationship going.
On trade, what do we know about the timeline of implementation of this agreement?
Well, it could be a bit slow. These things tend to take ages to get negotiated, and then they don't get implemented straight away. We've seen with Mercosur, for example, it's now going to go into a judicial review, which could slow it down, and then it's got to get ratified by the European Parliament. And similarly, this has to go through legal vetting, which will take about 6 months, and then it also has to be ratified by the Parliament. I mean, you see big economies in Europe obviously welcoming the India deal, particularly Germany for its automakers are welcoming this, so they'll probably push it through, but the implementation could take a while, and you do need that kind of issue again of the European Parliament, and we've seen some elements, some blocs in the European Parliament be a little bit concerned about some of the other trade deals that have been done of late.
Right. Bloomberg Chief Asia Correspondent Rosalind Matheson there with the latest. Coming up on the Asia Trade, we speak with the Hinrich Foundation about global trade policy as the UK's Keir Starmer heads to China. And we're live from the Goldman Sachs Global Macro Conference in Hong Kong, where the former European Commission President will be joining us. We have more ahead. This is Bloomberg.
UK Prime Minister Keir Starmer arrives in Beijing on Wednesday, confident he can broaden trade ties with China without annoying the US president. In an interview with Bloomberg before departing London, Starmer signalled an unwillingness to choose between Beijing and Washington. Let's bring in Bloomberg executive editor for Greater China, John Liu. So, John, we have been, let's take a step back first, seeing how Xi has been pretty busy this year on the diplomatic front. He's hosted Carney, Lee Jae-myung as well, now Starmer. Put things in perspective for us, its relations with the UK.
Well, I think there's been a real push by Beijing to expand how much influence it has on the international stage. And I think you're seeing all of these global leaders visit because there is an opportunity for Beijing to do that, given the disruptions that have come out of Washington, D.C., the things that the Trump administration has done to lead the traditional American allies to sort of try and rethink, recalibrate what their relationship should be between these two global superpowers. And I think Beijing sees the opportunity as taking action to take advantage.
Even despite all of the background and despite all of the rhetoric, the fact that Prime Minister Starmer is so confident that he doesn't have to choose between the U.S. and China, is that true, especially after what we've seen from President Trump on Canada?
I don't think it's true. I think that both the UK and Canada would like to not choose, but I think the truth is they have to walk a very fine balance. So you saw after Prime Minister Carney made his speech at Davos that President Trump threatened to put 100% tariffs on Canadian goods if Canada signed a trade agreement with China. And so in the aftermath, there was a call on Monday between President Trump and Prime Minister Carney in which Prime Minister Carney tried to explain to President Trump that he was not signing a trade deal, but there was a very narrow agreement between the Canada and China over canola and then some limited imports of Chinese EVs into Canada. And so I would imagine that if Prime Minister Starmer's trip to Beijing leads to some agreement on trade, he may very well have to have a phone call with Trump to try and explain how he's not running into the Chinese camp.
Yeah. John Liu, really good to have you with us. Bloomberg executive editor for Greater China, joining us today from Singapore. And we're just speaking about Canada. Well, India's oil minister says Canada has the potential to be among the country's top energy suppliers. Speaking to us at India Energy Week in Goa, Hardeep Singh Puri told us more about ongoing talks to boost energy ties with Ottawa.
I've had 3 visiting ministerial level delegations. I had Minister Sandhu first, then I had the Premier of British Columbia, and today Minister Hodgson. Yes. And I think we are going to be, I think I can tell you, issuing a statement, joint Canadian ministerial statement. We kicked off the first energy dialogue at ministerial level. We will be issuing the statement if it's not been issued already.
Sure.
So things are moving very fast.
Could you give us some more specifics, Minister, in terms of like any numbers you can put to the kind of enhanced energy trade we might see between the two countries?
I can tell you that I'm reluctant to speculate on numbers. Or I can tell you.
Not speculate. You've had 3 visits, so you would have worked out some framework.
So I don't know where it will reach. It will reach N million barrels or so. So I don't know. What I can tell you is the Canadians, we already have an investment there. IOCL has an investment there, and they are building 6 liquefaction plants in British Columbia. We are hoping that we'll be able to get some natural gas coming in from there. Okay? And we have that. We have scope.
Any quantity, any initial conversation on
a conversation is taking place as we speak.
Okay.
They are taking place as we speak. And the other thing is that, as a minister, by definition, I don't get into contracts and quantity.
Sure, I understand.
When people ask me how much you buy from a source,
have moved
I say they don't.
To you,
They do that because they are publicly listed companies.
How significant a supplier or source of energy will Canada become?
I think it could be quite large.
Can you put any ranking size number to it?
I can't put rank and file because it's a very dynamic, changing situation. Let me give you an example. Today we are the largest off-taker, if I can use a word somewhat inappropriately, of natural gas from the UAE. We are also off cylinder gas from the UAE. You know, some time ago, we only had a natural gas contract with the, I think with the Qataris, we had a 10-year agreement. Our next 10-year agreement is starting in 2028. We have got cylinder gas we used to buy only from the Saudis. We started buying from the Qataris, from the Emirates. We just signed on
with UAE.
US.
Yes.
UAE we have already into very big. We have to UAE. We signed on a quantity now. Total with UAE on natural gas, we are at a very high figure. So these things move very quickly.
All right.
And Canada, I think, has the potential to be among the top ones. There is that potential.
So amongst the top 5?
Yes, absolutely.
But in fact, some might say that it is a buyer's market. So I was quite curious as to why you would...
Even if I think that, sometimes I don't say it.
But because so do you think this is a buyer's market?
There is an element of buyer's market, yes. I can today very happily decide to switch from him to him and to another supplier. Yes. And by the way, these contracts are done on commercial basis. I mean, you float a tender at the point of importation, where say you want some energy at Vizag,
right,
or you want something on the western coast. Say, I need Basra light, for instance, or I need a heavier crude. You know, there's something like 300, 350 varieties and different refineries. And you float a tender, I want a particular country, and whoever responds to the tender with delivery at the point of import, they'll buy from them.
Indian Oil Minister Hardeep Singh Puri speaking with Bloomberg's Menaka Doshi at India Energy Week. More ahead on the Asia trade. This is Bloomberg.
Here are the latest from the corporate front. Holders of 2 China Vanke yuan bonds have accepted the developer's plan to delay the bulk of those payments by a year. The notes were both originally due last month, but filings show all holders voted in favor of the revised extension plan. Vanke would now repay 40% of the principal on both bonds on January 28th and the remainder in December. LVMH ADRs closed lower after sales at its key fashion unit fell over the holiday season due to sluggish demand. Organic sales for the fashion and leather goods division dropped 3% last quarter, slightly worse than expected. CEO Bernard Arnault is warning of a difficult operating environment and says LVMH will limit spending this year as a result. JP Morgan is said to have told its investment bankers to work harder to close the gap with rivals, including Goldman Sachs, on mergers and acquisitions. According to sources, the co-heads of global banking say the group underperformed last year. JP Morgan's investment banking fees fell unexpectedly in the fourth quarter as revenue from M&A advisories declined.
And here's a quick look at currencies in the Asia Pacific. The yen is hovering still at the 152 level. We do have that 40-year auction today. Watching Australia CPI in the next hour, as well as the dollar slides. This is Bloomberg.
India has completed its biggest and most historic free trade agreement. This historic agreement will make it easier for our farmers and small businesses to reach the European markets.
Prime Minister Narendra Modi on India's free trade agreement with the EU. Now, the two sides have concluded this agreement after almost 2 decades of negotiations. The Prime Minister says the agreement will be good for his country's manufacturing and services sectors, and this deal creates a free trade zone of some 2 billion people. It's also set to benefit Indian apparel makers and the jewelry sector. The pact is expected to be formally signed after legal vetting, which could take around 6 months. Lots to talk through on the trade front. Who better to ask than Hinrich Foundation's Head of Trade Policy, Deborah Elms. So, Deborah, we have all the focus for now on the EU-India agreement. Talk to us about how significant is this, how this might benefit both sides.
Well, I think it is important. I mean, as both leaders have pointed out repeatedly, huge number of people covered, a lot of sectors, a lot of trade, a lot of potential trade. And I think the key for me with EU-India is that after 20 years of negotiations, the economics are actually quite different than when they started. And in fact, an agreement that was always going to be important, I think could be even more important by the time it comes into force, because the world has changed a lot over those last 2 decades, and particularly now. And so I think the opportunities for deeper engagement between India and the EU, I think, is important.
What does this mean for the U.S.? Because it's not just the EU and India, right? They are bypassing the world's largest economy. How do you see this reordering of global trade?
Well, I think it's important to remember that this negotiation has been going on between the EU and India for 20 years. So that was pre-Donald Trump back in office. But now that he is back in office and now that he is determined to shatter the global trading regime, I think it's even more important that EU and India agree now and that they move relatively swiftly to bring this thing into force, because it's an important driver of growth for both the EU and for India.
If you look at the details of the India-EU deal, especially the 250,000 European-made cars, which will enter under preferential duty, does this give you an idea of how willing India is to go forward with these FTAs in order to shake off its protectionist reputation?
I think we need to see the details. One of the challenges always with dealing with Indian agreements is that, there's a lot of exceptions, exclusions, and challenges in using the trade deals. So we'll have to see whether the European Union and the EU and India ultimately came up with a better approach that's more business friendly for both sides. But I do think it's a significant deal. It's, again, these are major markets. They have a lot of potential going forward. And I think businesses should be eagerly anticipating the details once the texts are actually released.
And you would think that once you have a deal, that should be it. But as we have seen from President Trump's negotiating strategy, it seems he's reviewing all of these past deals, bringing into question South Korea's trade deal, of course, also attacking the European countries, Canadian products as well. Is this a new normal where all of the trade agreements with the Trump administration, we have to really see those with a little bit of skepticism going forward?
I think we do, and I think there's going to be a big difference between the deals signed by the Trump administration, which are thin and light, 2 pages, 20 pages, and even this EU-India deal, which is lighter than some trade agreements, will still run, I'm assuming, to several hundred pages with thousands of pages of commitments on specific products. Those are the kinds of trade deals that typically stick, as opposed to the napkin deals that Trump has been signing with trade partners that can, as you've seen, get ripped up, reformatted, called into question at any time by Donald Trump himself.
Can I ask you about the FX implications? I mean, we've been seeing this steep decline in the dollar in the past, 24 hours or so. How is that playing out for Asia exporters? Is that, truly denting their attractiveness in a way?
Well, one thing that companies will tell you repeatedly is that, tariffs are important, but that exchange rates and other issues matter as much and sometimes more. And I would argue that if you're going to have the decline of the dollar, that, especially at the levels that we've just seen over the last 24 hours, that will be much more salient for businesses in the near term than any tariff rate that gets announced out of Washington.
What is this going to mean for the idea that economies are trying to settle trade not using the US dollar? Is that going to be an increasing trend? They do it with local currencies.
I think it's possible. Again, it's a bit of a challenge here because I do think that the world order that we've been used to for 8 decades has been broken. And it's not clear yet how much of what we've had will be salvaged and how much will be made new. It will not be a sort of big bang creation of a new system. It will be the decision of thousands or millions of individual firms deciding who are going to be their partners, their suppliers, their customers, what currencies will they use, how will they design design their contracts, where are they likely to be headquartered. All of those kinds of decisions are going to result in new patterns. And one of the things that will matter, of course, is what happens with currencies and whether or not you continue to rely on the U.S. dollar, which for the moment remains king.
Deborah, when you look at all of these trade deals, the global realignment, not only when it comes to dollar policy, but also, of course, the geopolitics behind it, does this give you an idea of how long-lasting the fallout will be post-Trump?
I think it is going to be long-standing. Now, obviously, whatever happens after Trump, there'll be recalibration again, and I can imagine that there will be some, especially firms and some governments, that will say perhaps now they could be closer or more distant to the U.S. than they were under the Trump administration. But I think this path is really, every day that we go forward, setting up new realities that will be hard to unpick or unwind should we have a change in administration in the coming years.
Where does that leave the Indo-Pacific multilateral frameworks that have been worked out for years, such as the CPTPP?
I actually think they're in better shape. And one of the reasons why I have stuck in Asia for so long is that I still think this is the part of the world that is the most dynamic, the most interesting, the most integrated, the most trade dependent, with leaders who have, at least so far, been incredibly flexible and very committed to having trade and economic openness as a cornerstone of their economic development and growth story at the domestic level. And so I think those platforms like CPTPP, the Comprehensive and Progressive Trans-Pacific Partnership, is more urgent than ever at a time of great disruption.
With this disruption, we hear from the likes of Starmer saying there's a sort of unwillingness to pick between the U.S. or China, right? And this is, I think, a stance that a smaller country such as Singapore has also taken. We don't choose sides. But is it possible?
It's always been challenging to walk a tightrope between major powers. I think it was doable until recently to say with great confidence, we don't pick sides, it's going to be great. I think that's harder to justify going forward. I think that tightrope is narrower, and at some point, the decisions you take will add up to choosing a side. It's not like you wake up on a Tuesday and say, today I choose this side over that side. I don't think that's quite what's going to happen. But I think when you look at a set of actions and a set of decisions, where you go, where you invest, who you talk to, who you partner with, you will see ultimately sides being chosen, even if it doesn't appear like on that day to be a choice.
There's a cumulative effect, I suppose. Deborah, great to have you, as always. Thank you. Hinrich Foundation's Head of Trade Policy, Deborah Elms. We have more hit on the Asia trade. This is Bloomberg. Let's take a look at how currencies are faring with the steep decline in the dollar. You're actually seeing a bit of a reversal now, but don't forget this move was pretty seismic in terms of it being the steepest decline since Liberation Day, all triggered by what Trump had to say that he's not concerned with the decline of the US dollar. So giving traders fresh impetus for these bearish wagers. You are seeing, as the dollar recoups some of those declines, a bit of the reversal across Asia currencies, the yen, the offshore, the euro as well. Meantime, former Kansas City Fed President Esther George says she supports a pause in rate cuts. Speaking with Bloomberg's Anne-Marie Jordan, George also told us she agrees with Fed Chair Powell speaking out on Fed independence.
We have been dancing around these threats to independence and really trying not to make too much of it. But I think the chairman reached a point where he really did have to speak out and send a message to the public about how important the decision-making of the central bank is, that it not get caught up in political issues. And as you saw, the reaction from around the world, from former policymakers, was quite supportive of that, as was I.
That's when it comes to the video he released in reaction to the subpoena from the DOJ. But he also recently went to the Supreme Court to attend the hearing of Lisa Cook. And the administration said that he was now politicizing that hearing. What's your reaction to that movement from Jay Powell?
Well, I think the Supreme Court's decision is absolutely consequential to the future of the Federal Reserve and thinking about how this body will weigh in on the ability of removing Fed governors. So clearly, I think as a leader of this institution, his interest would be high in understanding how the courts might be talking about this and what the arguments are that are presented. I didn't view that as a political one.
Given these stances we have seen from him, do you think in the press conference he's going to be more willing to engage when reporters obviously ask a number of questions that are really on this line when it comes to politics?
Well, I'm quite sure he's going to get a number of questions, and I suspect he will address them. At the same time, though, trying to keep the focus on what it is this committee is really focused on, and that is responding to economic conditions in the United States. And so, yes, I think he will have to address what are likely to be a number of questions, and he may do so in the fashion he did in his previous statement. Again, bringing it back, though, to this is the job of the central bank and where he most likely will want to focus today.
Former Kansas City Fed President Esther George, and to her point, it was really those concerns around Fed independence as well that have led to that ongoing pressure on the U.S. dollar. Let's get more insight about currency moves with Sean Callow, Senior FX Analyst at InTouch Capital Markets. Sean, always good to see you. We have really heard from President Trump himself just a few minutes ago talking about how he can move the dollar up and down like a yo-yo. How do you really parse out and sort of understand the difference between these short-term moves and what could be fundamental issues with the dollar, such as South America trade or dollar debasement trade?
Yeah, I think that's a very important distinction, is what seemed to be sort of offhand comments responding to reporters' questions en route to his speech in Iowa. So is that necessarily a big change? It's obviously speaking from the heart. Really clearly, he isn't staying up late at night thinking about the dollar, worrying about its decline. But is it really a big change? We certainly want to hear from Secretary of Treasury Scott Bessent about the role that his department has in terms of dollar policy. Has anything major changed from his point of view? Does he want to encourage this sort of price action? It was a very sensitive time of day, I'd have to point out, in the 24-hour cycle for FX. It was a very illiquid time. I definitely agree with the knee-jerk response on the dollar, but whether it is a major change, it's still a little bit early to say.
So far, we have seen the U.S. dollar really being cushioned by strong U.S. data, right? And overnight, we just had consumer confidence now plunging to a 2014 low. What are your views about the trajectory for the greenback for the rest of the year then?
Yeah, so look, I think it's important to remember that we've had these episodes before, most dramatically, obviously, in the second quarter of 2025 with the Liberation Day tariff episode. Then we've had that recovery, and as you say, to the extent that we've had inflation lingering, strength in GDP by the look of it. Obviously, the job market is softening somewhat, but growth looks as though it's rebounding into year end, and so we're heading into the FOMC with virtually nothing priced at all in terms of a rate cut. So that lends support to the US dollar. So it might be wise not to get too bearish on the dollar near term while it's got that level of support from the Fed not being in a hurry to ease again. So obviously that's something that can change, but for the time being, it does limit the downside for the dollar.
So it could all sort of rest on the Fed going forward to prompt a sort of reversal in the greenback. But I wonder, given Trump's comments, as Shery highlighted earlier, about yo-yoing, and we have been seeing dollar volatility picking up, what are the implications? This is, after all, the world's reserve currency.
Yes, that's right. So I think that concern about that sort of blasé attitude to the dollar may well have a lingering impact. So this is not something that is necessarily a story for a week from now, or maybe even a few days. If we're talking about the sell US dollar trade, then it doesn't quite hold together when we've only seen a fairly mild increase in Treasury yields after his comments, and obviously it's a massive week for equities, which performed again well to start the week, and we've got those earnings reports coming out. So it's not from that sense, but it does fit into I think a process that probably really did kick off about 12 months ago. I think there has been a movement away from the dollar. You talked earlier about the denomination of trade. That's one factor, but the bulk of FX is determined by portfolio flows rather than direct trade flows. So I think that process is underway, but it's something that is gradual, and I do think it's chipping away at the US dollar's dominance.
How helpful is all this going to be for the Japanese yen, you think?
It's super helpful right now, isn't it? So all we had was a rate check, allegedly, on Friday in New York to get things to tip over. And bearing in mind that if we look at the data from the CME, the Commitment of Traders report, that showed that hedge funds were really pretty loaded up on short yen positions. So those are very much getting squeezed. I would be shocked if the Japan's MMF wasn't aware of that in terms of timing. Their long-term track record's not too bad in terms of that sort of intervention. They may not pick exactly the top on dollar yen, but they're pretty good as far as getting close to it when the markets are overdone. So much at stake with the Bank of Japan itself as far as when it tightens next again. But for the meantime, it takes a lot of that heat out of those carry trades short yen.
Yeah, let's talk a little bit about the carry trades, because we do have, of course, emerging market currencies also at record highs. So are there any that are more appealing to you at this point?
Well, it is a bit of a mixed bag. So I'd say that Korea I'm a little bit uncertain about, in terms of that there's still that lingering concern over the trade deal with the US, and in fact that's obviously flamed up a little bit more this week, and how the domestic confidence, I think, in the Korean one is a bit of a concern. Obviously, bigger picture, I think you've got very strong support for the Chinese yuan in terms of its external position, and there's some indications that it is that the PBOC is resisting the pace of appreciation. So that's one that's got plenty of upside potentially. And obviously you've got some of the more stable ones, Singapore dollar. In Asia, Thai baht linked to gold there as well. They're having a bit of trouble keeping a lid on that one, and it looks as though that may be the case near term as well. But obviously it's a bonus for some other emerging markets which are struggling with a weak currency. So India, Turkey, etc. They'd be pretty happy to see a pullback in the dollar.
Sean, great to get your insights. Thanks for taking the time today. Senior FX analyst at InTouch Capital Markets, Sean Callow. Now, coming up later today, our coverage continues of the Goldman Sachs Global Macro Conference in Hong Kong. We'll discuss the U.S. rates outlook with former Dallas Fed President Robert Kaplan. And Goldman's Trina Chen tells us why weaker Chinese demand could trigger a correction in metals prices. Those interviews coming up on The China Show. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how markets are trading ahead of the market opens in Japan and South Korea, as we're also digesting the latest BOJ policy meetings from their meeting in December. And remember, that's the time when the BOJ hiked rates to the highest level in 30 years. Now, some members of the BOJ saying that it's appropriate to keep raising rates if the outlook is met at this meeting. Also, the bank's projection for growth in fiscal 2026 and 2025 were actually raised. So we continue continue to watch the BOJ minutes, which now say most members will decide policy without a specific pace in mind. Of course, we saw the last policy decision of the BOJ last week with no change at all, but the Japanese yen now continuing to see a little bit of weakness after surging against the U.S. dollar, given the dollar weakness on one side on trade concerns, not to mention just a broad dollar debasement trade, but also on speculation that we might see more coordinated action between the U.S. and Japan when it comes to supporting the Japanese currency. Take a look at the offshore yuan, also holding at that 693 level after 3 sessions of gains against the greenback. We're also seeing significant strength in the euro, which is under a bit of pressure at the moment, but this is only after gaining ground to the highest level since 2021 on the back of that dollar trade, which is now around 4-year lows. We're seeing a little bit of a bounce back in the early Asian session, but this is after the worst day since April. Not to mention that the Bloomberg Dollar Index just saw its steepest 4-day drop since President Trump unveiled his sweeping tariffs back in April. President Trump also saying that he isn't necessarily concerned about the decline in the dollar hitting a new, making the greenback actually fall to a new session low, Avril. And of course, he was saying that he could make the dollar go up or down like a yo-yo.
Yeah, I mean, you talk about bounce backs, right? What was really remarkable was the bounce back in the Kospi yesterday, pretty much shrugging off Trump's tariff threats. And I think the focus really on the likes of SK Hynix, the idea that they're going to be supplying not just NVIDIA, but Microsoft. So that's what we're going to be watching in the session. Along with that, the interplay of how the dollar weakness is affecting some of these Asian exporters. Don't forget, we saw stocks on Wall Street, those record highs, the focus on corporate profits this week as well. We'll track the markets open. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after the U.S. dollar fell to a 4-year low. We're seeing a little bit of support early in the Asian session in April, but of course this after we heard from President Trump saying that he could move the dollar up or down like a yo-yo, and that sent the dollar to session lows. And of course, those concerns about trade frictions, his policies surrounding, of course, geopolitics as well, all weighing on the greenback.
Yeah, to your point about the volatility, we have been seeing the dollar on the Bloomberg Dollar Index. It has been bouncing back since those steep declines, steeper since Liberation Day. So this is interesting to see, and perhaps also worthwhile to pass the short term, the headline surfing versus the longer term drivers on the greenback. Shery.
Yeah, actually bets that the dollar might weaken from now on have risen to record highs. And the other side of that trade, we have seen several Asian currencies being supported, including the Japanese yen at the moment under a little bit of downside pressure. But this, of course, after the best run that the Japanese yen saw since the implosion of global carry trades back in August of 2024. So we're still at that 152 level against the greenback. We had seen some strength for the Nikkei in the previous session, but we're seeing the downside, of course, of a strong Japanese yen as well, with Nikkei and the topics falling at the moment. We are bracing for that 40-year JGB auction after that JGB meltdown last week. You can see the 10-year yield holding at that 228 level at the moment. We have heard from the BOJ policy meeting from their last meeting in December when they hiked rates to the highest in 30 years that they will judge accordingly when it comes to the pace of these rate hikes to come. But one member really warning that they want to hike rates in that December meeting in order to avoid more fast-paced tightening in the future. Take a look at how Korea is also coming online, because it was a really interesting trading session yesterday when we had those tariff threats coming from President Trump, and we saw the Kospi, the Kosdaq all fall, pressure on the Korean won. But by the end of the session, we actually saw the Kospi and the Kosdaq reverse those losses. And you can see in today's trading session as well, the Kospi continuing to rally, and it's been really amazing amazing to see this market on that tear, with the Kospi now up more than 95% plus in the past year or so. The Korean won, though, a whole different story. Concerns about capital outflows have continued to weigh on the currency. But at least in today's session, Avril, we are seeing a little bit of strength.
Yeah, you talk about this surge in the Kospi that's really being underpinned by the tech giants. And we are, of course, watching out for their earnings. SK Hynix, Samsung Electronics tomorrow. Also watching some of the US tech names. The focus seems to be on those corporate profits and the expectations that this can continue to fuel market gains. Certainly, if you look at the market action, all-time highs in the past session. And then futures pointing to upside. Interesting dynamic also has been how gold has been rising along with U.S. stocks or stocks overall, although you are seeing a bit of that pullback now, perhaps to do with the reversal in the dollar slump. So you are seeing a bit of a bounce back as far as the greenback is concerned. All this was sparked by Trump's comments that he's not too concerned about the weakening in the dollar. Let's get more on that dollar sell-off with our team. We have Bloomberg chief economist Tom Orlick and Bloomberg MLive strategist Brendan Fagan. Tom, let's start with you first. I mean, we've been trying to unpack these moves in the dollar and how volatile all this seems. What are the implications here, the longer-term ones?
So I don't think it's going to be a surprise to anyone, Avril, that President Trump favours a weak dollar. That's been a position which he's consistently held over the years. He views a weak dollar as pro-growth, pro-exports, pro-profits. I think the issue for the markets here is really one of timing. These comments by President Trump implicitly endorsing a weak dollar, saying he could make it go up and down like a yo-yo, they come at a moment of elevated geopolitical stress. Venezuela, Greenland, Iran. They come at a moment when President Trump is remaking the US role in global trade with enormous tariffs imposed over the course of 2025. And they also come at a moment when he's considering a choice of a new Fed chair and clearly leaning towards a choice that will favour low interest rates. So you put all of those things together, a president that favours a weak dollar, geopolitical turmoil, much of it stemming from decisions made in the White House, tariffs that reduce the US role in global trade, and expectations of a more dovish Fed. And there's a lot of reasons that traders are going to be selling the dollar on the back of those Trump remarks.
Brendan, to Tom's point about the fragility of the environment right now and sentiment, what are you seeing in positioning that could give us some outlook when it comes to the U.S. dollar in the next few days, especially with all of these other risks coming up?
Sure. So the scary thing here, if you're a dollar bull, is that the options market really seems to be pressing on selling the dollar. If you look at 1 month risk reversals, which are a pretty speculative view, the premium for puts over calls is increasing at a pretty large rate. So it's pretty worrying if you're a dollar bull. But the other thing you're looking at is intraday price action, and seeing dollar yen once again go out on the lows tells you that right up until the close, until the daily reset, you still have people looking to get out of their positions, whether that is post-Takaichi rise to power yen shorts, which we saw a large gap open weeks ago, and that is yet to fill on the downside. But there are many warning signals, particularly in the options market, that create cause for concern.
What are the expectations that gold continues powering through against this backdrop? Brendan?
Yeah. Metals are a curious case. It seems to be a little bit of a squeeze here, but also you have a fundamental story of a weaker dollar. Over time, the expectation for easier policy, lower rates, as Tom touched on with the president's aims. So there is this macro backdrop that is supportive of metals, but if you look across the spectrum, there are questions to be asked. Just earlier this week, silver was up 14% intraday and gave that gain all back just to go up another 8 or 9% yesterday. So metals are behaving in an interesting way, but overall, the backdrop is still relatively supportive to diversify away from dollar assets.
Tom, to Brendan's point, the macro backdrop was also pretty supportive of the U.S. dollar so far, especially when it comes to the state of the U.S. economy. But the latest consumer confidence numbers, does that point to a potential turn in the tide when it comes to the greenback?
So certainly, U.S. economic strength is a kind of a fundamental reason for confidence in the dollar. At the same time, I think U.S. growth momentum, I'm not sure that the intersection between that and what's happening with the dollar is going to be the most important thing right now. I think probably if I'm thinking about the weeks ahead, it could well be more Trump comments and that race for Fed chair, which are top of mind for the FX markets. Of course, we've got a Fed meeting in the diary, and a decision expected tomorrow. I think one crucial thing which markets are going to be watching for is firstly, how aggressive Powell is in pushing back against Trump's attacks on Fed independence. And secondly, whether Governor Chris Waller dissents. Now, if Waller dissents, I think markets could take that as an indication that he's still firmly in the race for Fed chair. And I think for the markets, a Waller chair could actually be a pretty positive outcome as he combines a huge amount of credibility in monetary policy with at least a degree of political alignment with the White House.
Tom, what about what markets are watching in terms of the possibility of a partial U.S. government shutdown and what that could mean for another data gap?
So that's a really great question, Avril. And of course, the possibility of another shutdown has hoved back into view as a result of the chaos that we're seeing on the streets of Minnesota and those tragic videos of the ICE shooting of two Minnesota citizens. Democrats in Congress now threatening to block spending bills until that situation is resolved. Now, if we do have another government shutdown, I think that's going to add to the US dysfunction narrative. Part of the reason for sort of fundamental dollar strength is confidence in the US institutions. Well, if there's video footage of chaos on the streets of US states, if the US government can't fund itself, that doesn't exactly speak to institutional strength. And if a shutdown is protracted, we could, as you know, Avril, have another gap in data coverage. And if we have a gap in data coverage, well, that's going to add to confusion on the state of the US economy.
And with the weakness of the U.S. dollar and speculation of coordinated action between the U.S. and Japan, we actually have seen that pop in the Japanese yen. Brendan, we do have a very important 40-year auction in the JGB space today as well, with the dynamics at play right now. What will you be watching in the markets?
You're really just looking to see how well the auction is digested. One cause for concern is just how the long end traded in the U.S. overnight. 30's up about 5 basis points on the session. So if the JGB market can take it in stride and offer a sense of calm, then that'll be reassuring, and you'll likely see the yen bid extend. But there are a lot of questions up in the air about particularly the long end of the JGB market here. So 40s are on notice, and it'll be an interesting auction for sure.
Brendan Fagan of Bloomberg M Live, also Tom Orlik of Bloomberg Economics. Really good to have you both with us today with that breakdown of all things markets as we continue to watch the Japanese markets and some movers, especially in the exporting side of things, because the Japanese yen, as I mentioned, now trading at that 152 level against the U.S. dollar. A little bit more weakness in today's session, but this was still the best run for the Japanese yen since the implosion, remember, of global carry trades back in 2024. So you can see the strength of the Japanese yen has put that damper when it comes to those exporters making their goods less competitive in global markets. On the other side, you can see that it's a sea of green for those tech names in South Korea. That market has been on a tear, and we're talking really about the Kospi gaining more than 95%, and even those gains extending to the Kosdaq. LG Energy, a separate story. They're expected to supply humanoid robot batteries to Tesla, according to local media India. More ahead on the Asia trade. This is Bloomberg.
We delivered the mother of all deals. We're creating a market of 2 billion people. And this is the tale of two giants. And by combining these strengths, we reduce strategic dependencies at a time when trade is increasingly weaponized.
India has completed its biggest and most historic free trade agreement. This historic agreement will make it easier for our farmers and small businesses to reach the European markets.
European Commission President Ursula von der Leyen and Prime Minister Narendra Modi on the EU's trade deal with India, sealed after nearly 2 decades of negotiations. Let's bring in our Chief Asia correspondent, Rosalind Matheson, for more on this. So, Ross, as we were discussing earlier, it's really going to be the devil in the details, the implementation as well, even though this is, make no mistake, really significant. I wonder if you could touch on whether the U.S. backdrop kind of complicates things, because we are hearing from the likes of Greer, for example, saying India must do more to wind down Russian oil buys. Is there a chance that implementation could be delayed in a way?
Well, certainly it does reflect that pragmatism between the EU and India, at least, that they need to diversify. And perhaps, anything that comes from the US only accelerates that realization that they have to find new markets. They have to be able to have different places for their products and their business. And you can see the US pressure perhaps accelerating that. But also, it just feeds into the careful way you've got to manage how you talk about these things to show that it's not about trying to threaten or disrupt the US. It's simply business pragmatism, because as you can say, the example of South Korea, the US pressuring South Korea now, saying your parliament's not passed our free trade deal, now talking about services, like they're obviously trying to keep the pressure going and worried that maybe, Korea also is a place that's diversifying. And you can see it even in the way that the UK Prime Minister is visiting China this week. All the language these countries are talking about is careful diversification, but we still see the US as a key partner, and that's kind of the flip side of all this rhetoric, is showing, yes, the US is important, business and trade there is not going to go away. This is not about trying to pick a side and take a side. It's very much about just balancing our relationships. And you can see the EU and India very much doing that with the US in the way that they've signed this deal.
So how meaningful is this trade deal between the EU and India, and especially as it includes also a security component?
Well, that's right. I mean, Ursula von der Leyen is correct in saying it's the mother of all trade deals. I mean, it's a very, very big trade deal for both India and the EU. It opens up a lot of their markets to each other in ways that have not been possible for decades. It gives European car makers access to India. It gives Indian companies, particularly textiles, apparel, footwear, food companies as well, access to the very, very big and important European market. So there's a massive signal there for their companies. And there's also the element of this security cooperation that's part of this deal that's been agreed to alongside this trade deal, which is to cooperate much more on the security front. So perhaps joint development on the defence side, on procurement perhaps as well, and particularly around sharing of intelligence, which is really important. And so the EU and India have agreed on that in parallel, and that sends a very strong political signal that India is also looking to deepen the relationship beyond trade and sees trade and security very much bound up together. And that's something that Donald Trump very much obviously sees also in the way he approaches his relationship. So the two of those things coming together is a pretty big signal.
Bloomberg Chief Asia correspondent Rosalind Matheson there with the latest on that latest trade deal between the EU and India. Now, the Goldman Sachs Global Macro Conference continues today in Hong Kong. Let's cross over to the event where our Chief North Asia correspondent, Steve Van Engel, is standing by with our next guest. Steve.
Well, perfectly timed guest. The first guest on day 2 of the Global Macro Conference here at Goldman Sachs in Hong Kong is the former European Commission president from 2004 to 2014, José Manuel Barroso. You were heavily involved in maybe futile negotiations with the Indians over the past couple of decades as they finally brought this to fruition of a free trade agreement, as Ursula von der Leyen says, the mother of all deals. Was this expedited specifically because of the diversification trend and the rupture that we saw last week in Davos, cross-Atlantic between the United States and Europe?
Yes, it was certainly expedited, but I will not link it to Davos, but to a position taken already before. Yes, I can speak based on my experience. I tried to have an FTA with India at that time. It was the late Prime Minister Singh, but it was not possible. Let me tell you very frankly, I'm no longer here representing the European Union. I'm speaking only on my own behalf. The Indians, for me, are probably the most tough negotiators in the world.
Yeah.
Very tough negotiators. And there was also heavy protectionism there. So the fact that now both the European Union and India, they conclude among themselves the biggest trade deal ever for each one of them, I think it's a very important signal of the new world order, where there is a increased attention to diversification, to hedging the relationship. By the way, it was not just with India. The European Union has concluded recently the European Union-Mercosur agreement
in South America,
Brazil and other South American countries that also took more than 30 years. In fact, negotiations were 25 years. I was also at the origin of that agreement as foreign minister of my country with the foreign minister of Brazil then. And it took us 30 years, but now it was possible because now the incentives to create cross-region cooperation is higher than some time ago.
Does it mean sort of, and you talked about it in the last couple of days here in Hong Kong at the AFF and also here at Goldman Sachs, and is whether there's a deterioration of the cross-Atlantic partnership and the European Union must diversify its partnerships, as you said, to South America, to India. And what does that also mean for the dollar's dominance in the global economy? We're seeing, obviously, this erosion of sentiment towards U.S. assets because of the cross-Atlantic issues, because of the Greenland issue, some sporadic and chaotic policies, if you will, from the Trump administration. I guess we're trying to link the dots here, but do you see a complete linking?
Maybe I can separate issues. So
sure.
First of all, we can start with the dollar. I'm not a currency expert. I cannot comment on, let's say, the movements of the different currencies. But what I know from experience, when I was president of the Commission during the euro area crisis, you remember, many analysts, including the most respected economists in the world, were predicting Greece leaving the euro. Yeah. Many were predicting the collapse of the euro. The reality is that the euro remains by far the second most important global currency, much ahead of all the others except the dollar. And this, I want to underline this point, because I think sometimes globally people underestimate the resilience of the European Union and the resilience of the euro. And I'm no longer representing the European Union. I'm giving you, I think, an objective assessment. Now, about your first point, to be honest, the reality is that there is a crisis of confidence today between the United States and Europe, even in NATO, not only the European Union, including the United Kingdom, that is probably the closest ally of the United States in Europe.
And Keir Starmer's in Beijing, by the way, this week.
By the way, and by the way, Mark Carney was also in China recently.
New world order.
There is a change, of course. I have to say the impact of the statements about Greenland was huge in Europe. It was a real shock in Europe. Having said that, I do not agree with those who say that's the end of the transatlantic relationship. Certainly, I'm European and I'm an Atlanticist. I continue to think that it's critically important for Europe, the strong relation with the United States. And I also believe it will be a huge mistake for the United States to invest less in NATO. NATO, let's be honest, is not just about the protection of Europe. It's also about the projection of power of the United States.
How fragile is NATO alliance right now. Obviously, if Donald Trump still has intentions on Greenland, that potentially could dismantle NATO. And the second part of that question is we tie it back to the India-EU agreement. They also have a strategic defense partnership now, which took years and years and years to come to fruition as well. But you had to simply drop the language about Russia in that agreement to get that across the line, because India buys weapons and oil from Russia. Two parts of the same question about the threat behind the scenes of Russia.
Very, very interesting points. Two separate points, but very interesting. First of all, about the relationship with the United States, being honest and objective, we have to recognize that's a difficult moment today in Europe. At least the perception in Europe is quite negative.
Yeah.
Having said that about NATO, and that's a paradox, I think NATO was never as strong as it is today. NATO, in fact, is stronger now than before the invasion of Ukraine by Russia. If the goal of Mr. Putin was to weaken NATO and to make NATO further away from Russia, in fact, he got exactly the opposite. In fact, Putin was making everything to make NATO great again. Yeah. Now we have countries that were neutral, like Finland and Sweden, and Finland has a bigger border with Russia than Ukraine. Now they are members of NATO. And in fact, in operational terms, I'm in contact, very close contact with NATO, not only the Secretary General, Mark Rutte, but also the military commanders.
Yeah.
And my information is that the cooperation between the American generals and European generals is perfect. So the professionals are doing very well. So NATO is in fact very strong. But we should be attentive to the political issue, avoiding that the political rhetoric creates a problem of confidence there. That's my honest assessment. About the issue of India.
Very quickly, sir. Unfortunately, we're coming up against the end.
Very quickly. The reality is that Europe is finally becoming what I call no longer a geopolitical teenager, but a geopolitical mature actor. We have to be intelligent and to separate the issues. Yes, we know about the special relationship of India with Russia, but it's also in our interest to have a very strong relationship with India.
President Barroso, thanks so much for your time. Really great. We could go on and on and on, and I wish we could. The clock is our enemy here. Back to you, Avril.
Yeah, time is against us. Steve, thank you so much. Great conversation there. We have more ahead on the Asia trade. This is Bloomberg.
Big moves in the Japanese session with Shin-Etsu Chemical, the chip material maker, plunging on third quarter earnings miss. Their shareholders also planning to sell stocks to expand their retail investor base. Video game maker Capcom surging at the moment.
We have breaking data crossing the terminal out of Australia, where we are expecting the December CPI numbers. On year, the estimate is for it to come in at 3.6%. And of course, we have been seeing already the Australian jobs market, based on the recent data, coming in pretty hard. Now, aside from that, also watching on for the on-month figure. So we have the numbers. In the month of December, 3.8%. On year. That is the gain, which is a faster pace than the prior reading. And this is a key input before the RBA, which of course has a decision due next week. Does this sort of coalesce around the discussions about a rate hike and perhaps a bit more hawkish messaging? You are seeing that reaction in the Aussie dollar versus the greenback. Of course, we already saw a bit of that coming through given the dollar slump, but Aussie now spiking against the US dollar. Shery?
And we do have breaking news at the moment crossing the Bloomberg, coming from the Wall Street Journal, that's now saying the SoftBank is in talks to invest up to $30 billion more in OpenAI, according to sources that spoke to that company. The ChatGPT maker seeking up to $100 billion in new capital from investors, and a round that could value it at as much as $830 billion if it succeeds in raising the full amount. This news, the SoftBank is reportedly in talks to invest up to $30 billion billion more in OpenAI. Coming as earlier this week, Bloomberg also reported that SoftBank had halted talks about an acquisition of U.S. data center operator Switch that for months Sun had pursued. This deal would have been around $50 billion for Switch. You can see SoftBank at the moment gaining about 1%. We'll continue to look into SoftBank's AI ambitions and its build-out of infrastructure and how SoftBank and Masayoshi Son continues to bet on artificial intelligence. But really, it's that narrative around artificial intelligence, the ongoing tech rally that sent the Korean stock market to record highs, despite the fact that the Korean won has been under pressure due to other idiosyncratic news like concerns about capital outflows. We have seen the Kospi and the Kosdaq reach new record highs. Even today, we're hearing from Yonhap News, the local media there, that SK Hynix has secured 2/3 of NVIDIA's HBM4 demand. Remember, SK Hynix has led in this advanced chip procurement for NVIDIA, and we have seen that rally in the Kospi with the SK Hynix stock, Samsung Electronics stock really leading the gains. Samsung Electronics also in talks with NVIDIA for that latest chip technology. Let's discuss all of this and bring in Chong-In Yoon from Seoul, founder and CEO of Fibonacci Asset Management Global. Chong-In, great to have you with us on a day like today when we continue to get more tech news, more optimism about the Korean stock market, not necessarily about the Korean won. But what does this tell you about where the South Korean outlook could go from here, given that we've seen an immense rally already?
So last year, Korea showed one of the best performing year in many years, with index up nearly 70%. And people are questioning whether this can be a multi-year rally or a short-term thing. And it looks like this rally is well supported by the earnings and fundamentals. And probably we're in the early or mid-cycle of the rally. And looks like the momentum driven by the AI chips will continue into 2027.
What about Trump's tariff threats?
So obviously, when the news was out, we had a very short-term adjustment in the prices. It didn't last for more than a few hours. And we are now seeing a very strong rally yesterday as well as today. I don't think investors are seriously contemplating on the tariffs comments, and it's probably not going to impact the fundamentals and the strengths of earning into first half of this year and probably next year.
Jong-In, on the South Korean chip names that have been fueling this gain, we have been seeing it benefiting from the memory chip shortage. And are there risks to this narrative, though? Because, that could also affect their consumer electronics business at the time when valuations are at these levels.
So if you look at the foreign position, it's still relatively light. This is not a overcrowded trade, and we're seeing probably this year a more meaningful increase in the foreign ownership for both SK Hynix and Samsung Electronics. However, if you look at the order book, it's actually pretty much fully booked until 2027. We're running out of chips. And that expectation is already priced in the current prices. And we've seen this multiple times. Whenever SK Hynix released a record-breaking earning, on that specific day, the price dipped because a lot of investors take profit. And on 29th, when both Samsung and SK Hynix released the earning, and if it meets the expectation or surpassed the expectation, from trading perspective, you will see a temporary adjustment in the price, which I think will present another buying opportunity if you are a long-term investor.
Is there a buying opportunity for the Kosdaq as well? I mean, how are foreign investors viewing smaller companies in Korea?
So if you look at the composition of Kosdaq, it's heavily weighted in bio stocks. And with the biosector in general is pretty much rate sensitive. So if we see some inflation data that points to BOK being more hawkish, that can actually derail the momentum. Also, there's an idiosyncratic risk. Any failed phase tests and the bad results can derail the momentum. Investing in core stock requires different animal spirit than investing in KOSPI.
How big of a risk does the Korean won pose for the stock market rally? We understand that a weak Korean won helps exporters, but at a time when we continue to talk about disorderly moves in the currency space, US dollar weakness, Japanese yen weakness, a little bit of support with US and the Japanese officials, potential coordinated action. How much of a risk are these moves for the broader Korean space?
So usually weaker Korea won is supportive to stocks because it actually helps the profit for the exporting companies. However, disorderly movement can be a threat. Now, if you look at the data coming from Japan and the US, there's a likelihood that the inflation data can be hotter than expected. So any hawkishness coming from BOJ and the Fed can impact the currency as well. And that strengthening of yen and dollar against Korea won can cause a temporary shift in the sentiment. Now, at this level, Korea won seems to be trading at fair value, probably slightly weaker than its actual fundamental. However, we might see the Korea won weakening further in a disorderly manner, depending on the data from Japan and the US.
What about the dynamic between the Korean won and the Chinese yuan? I mean, recently it seems more tied up with the moves in the Japanese currency, but, you know, they do have that traditional relationship with the renminbi.
So, fundamentals in China has shown some inflection point starting last year, and we still think that China will have to go through a very long path to actually recover from the current state. And that actually creates a gap in the demand, and that's also dragging some of the exporting companies' profit. However, when it comes to China, I think the political situation, diplomatic situation between Korea and China plays a more relevant role than currency itself. And that's fortunately improving, I think.
Yes, there is a bit of a turnaround potentially. Jong-in, thank you so much. Jong-in Yoon is founder and CEO of Fibonacci Asset Management Global. Now, sticking with FX, strategists say Asian currencies look to be in pole position to benefit from renewed dollar weakness, and they note that low liquidity and nervousness among traders could make the moves even bigger. Let's bring in our chief Asia FX and rates correspondent, Ruth Carson. Ruth, we've been seeing investors digest Trump's comments. What are strategists telling you?
Absolutely. Another wild night in a $9.5 trillion a day market, which tells you just how big Trump's impact is when it comes to moving the dollar. So strategists are now weighing who are the biggest winners and losers. We saw a massive, massive move in the dollar overnight. Definitely Asian currencies are set to play catch up. There is a bit of a breather at the moment, particularly when it comes to G10, because the yen, for example, has rallied so hard since Friday. I think dollar yen is down almost, 6, 7, 8 big figures. So the question now is, how much more has the rally got to run? Emerging Asia is a slightly different story, with the won, with Taiwan dollar, and then you've also got the high yielders like the rupee, which we know was at a record low, and also the Indonesian rupiah. All eyes will be on these currencies because everyone trades with the US. Everyone deals with the dollar.
Which is why looking at positioning in the dollar is so important at a time when traders are paying the most on record to bet on a deeper sell-off in the greenback, right?
Absolutely, and options markets are definitely screaming that at the moment. Now, it's important to remember, though, that people have been betting on dollar weakness for a long time. There's all these debates around debasement, on, sell America, on things like quiet quitting of American assets. All of this is bearish to dollar. Trump just gave another reason for investors to sort of turbocharge selling of the dollar. Then the question, obviously, is just how far and big this impact will be across every corner of the globe.
Chief FX and rates correspondent in Asia, Ruth Carson, there for us on all of these crazy currency moves that we're seeing right now, especially as we keep an eye on the Japanese yen that is weakening against the U.S. dollar after its best run since the implosion of global carry trades back in August of 2024. The Nikkei is now down about 0.9%. Of course, as I mentioned, we had the run-up in the Japanese yen, which is really interesting because with this idea that we might see a sustained yen rebound and the promise coming from politicians, especially Prime Minister Takaichi talking about that temporary food tax cut, we are seeing a little bit of renewed hopes that perhaps this will help Japan's domestic veered stocks. They had stagnated since around September of last year. You can see right on that chart how international Japanese stocks have actually gained ground while those domestically veered ones have lagged behind. We have more ahead on the Asia trade. This is Bloomberg.
UK Prime Minister Keir Starmer arrives in Beijing on Wednesday, confident he can broaden trade ties with China without antagonizing the US president. In an interview with Bloomberg before departing London, Starmer signaled an unwillingness to choose between Beijing and Washington. Let's bring in our China economy and government reporter, Callow Murphy. Callow, talk to us about what's on the table with Starmer in Beijing.
So, yeah, as you mentioned, the key point here is to try to walk that fine line between engaging more closely with China and not alienating the US. So a heavy focus on economics, on trade, on investment, and on services. Of course, there will be some diplomacy elements here as well, because both countries, the UK and China, are involved in the issues around their respective embassies. But the key trick here, as you mentioned, will be doing it in a way that doesn't alert Trump or sort of annoy him in any way. And as you said, Starmer says that he's confident he can do that, but let's see. I think the next couple of days, obviously, we'll get more clarity on exactly how that looks.
Especially given that the Canadian Prime Minister Carney hasn't been able to achieve that, right, when it comes to getting President Trump annoyed about new relationships on trade with China. So how are we seeing now this play out, especially in the global realignment of these economic allies?
Right. So as you know, Carney came, he had this trade deal, which was, in sort of the big picture, it's relatively modest, but that was enough to sort of make Trump threaten more tariffs. Now, can Starmer do the same? Remains to be seen. But from the Chinese perspective, at least from Beijing's perspective, this is only good news. It's another part of a flurry of leaders who have been coming to the capital, including Macron and including, of course, Carney himself. We're going to have the German Chancellor here next month and Trump as well. So for Beijing, the optics are great. It's got its embassy, this mega embassy in London has been greenlit, and already its Commerce Ministry is signaling that a trade deal will be sort of in the works with the UK. Again, the scale of that remains to be seen, because a lot of these deals, or a lot of the sort of olive branches that we might be able to see in the coming days, ways have been telegraphed over the years because this is a rare visit by the British PM. It's the first in, I think, around 8 years. But there have been other senior British officials coming through Beijing in the past 18 months. And so we have a good sense of what might be on the table. They're just waiting for the right moment to announce some of these things. And that moment seems to be this week with the visit of Starmer to Beijing.
Colin, to your point, maybe all this is significant in terms of the symbolism, more so than the trading relationship per se. What is your sense of what Beijing might perhaps want out of the UK in this relationship specifically?
Well, I think the UK is a good sort of symbol, as you say. You know, it's not a member of the EU, but it is a prominent European economy. And by showing how relations with the UK can be advanced, it is also sending a kind of a signal or a template, if you will, of the possibilities of how a relationship might look, whether it be the UK or whether it be the EU or other allies of the US, basically, who might seem forced to sort of look at other options now that we're getting, you know, consistent evidence of the US becoming more unreliable as a player. So again, for Beijing, this is only a positive thing. But of course, they need to be able to leverage that opportunity, and this is where Beijing has fallen down on many occasions in the past, whereby they do have this opportunity to leverage the geopolitical landscape globally, but then they fall short. You know, what they offer is not sweeping enough or not sort of significant enough to move the needle in any way. So again, details will emerge. What exactly is the nature of any trade and investment deal that the UK rather, excuse me, and Beijing can strike? I mean, the details will be of key, and the scope. If it's just symbolic, if it's just you know, stuff that we already expected, then maybe, you know, that won't be enough to convince allies that Beijing does offer a viable option.
Colin Murphy, our Bloomberg China economy and government reporter there. And some of the other top global headlines that we're following at the moment: deliveries of Russian crude into Indian port slumped last month, falling to about 1.2 million barrels a day, the lowest in more than 3 years. That's left more Russian tankers idling off India's coast and nearby Oman as they struggle to find refineries willing to take the oil. Still, U.S. Trade Representative Jamieson Greer says India needs to cut Russian oil purchases even further. President Trump says the U.S. has a big armada headed to the Middle East because of Iran. Trump has previously threatened to attack Iran over its violent crackdown on nationwide protests. He told a rally in Iowa on Tuesday that he hopes Tehran makes a deal. He earlier said on a radio show that the force being deployed was larger than the one sent to Venezuela. We have more ahead on the Asia trade. This is Bloomberg.
China Vanke has one more breathing room as it prepares for a major restructuring after holders of 2 yuan bonds accepted the developer's plan to delay payments. Let's get the details with Asia credit reporter Trista Sinilo. Trista, we're tracking Vanke again. You know, we are seeing that sense that it's gotten a victory of sorts to avoid default. Is that also your read? How much of a victory is this really being seen as?
Yeah, so yuan holder has approved the revised extended plan, which means that Vanke will pay 40% of the principal of 2 yuan note, which is in total of over 5 billion yuan today, and they will pay the rest of it in December. It's kind of a victory for Vanke to avert the imminent default because its next bond maturity will be in late April. So Vanke will have more time to prepare its holistic restructuring plan, as we reported earlier. And, bondholder and investor always wonder where did Vanke get this amount of money, because if you look at its balance sheet, if you can look at the sales number, it's really hard for Vanke itself to come up with this large amount of money to pay the 40% of the principal. But we got the answer late last night. Vanke said its biggest shareholder, Shenzhen Metro, offered it up to 2.3 billion yuan loan to help it to repay those, bond principal and interest. So right now we need to wait for more about, the following details of anything coming up with the restructuring plan, or whether other yuan we get the same treatment.
Are those challenges the reason why we're seeing their dollar bonds or stocks also really not react much to the good news?
Yeah, so when Vanke proposed the revised proposal, its note actually jumped like over 50% within a few days, but it still traded in deeply distressed level. For its dollar notes, it's still traded at around 25 cents on the dollar. So which shows that investors still have great concern on this name, and they are still not clear about this company's future coming forward.
Bloomberg's Asia credit reporter Trista Shinyi-Lo there with the latest on China Vanke. As we continue to watch the Japanese and Korean markets with pressure on the Nikkei at the moment ahead of that consequential 40-year auction, although the Kospi and the Kosdaq still on a tear, the Kosdaq at the highest level since 2000. The China show is next. This is Bloomberg.